I'm going to take you through the latest news so that you understand just how crazy the news is, but then I'll just give you a primer on the CTKS method and how you can use it to make yourself more of a financial blessing to yourself and those you love. Let's run the numbers. In this video, we're going to go through the latest news. We're going to look at the good news and the bad news. What you'll find is it takes a lot of time, many years, to exercise bogan out of you. That's buy on good news. You don't want to do that. And you don't want to be Robin, who runs on bad news. You don't want to do that either. You want to be BORSOG, which is buy on red, sell on green. What you're going to find over time, if you do bogan or you do Robin, you're just going to lose money. Let's start off with some bogan news, buying on good news. Well, this is certainly some good news. We are here. Oh, it's only up only. Awesome. If you're new to our global family, a very warm welcome, and thank you to everybody who commented in yesterday's video. It was just awesome. In some very good news, the UK Parliament introduced a bill to recognise Bitcoin and crypto as personal property. In another sign of adoption, Bitcoin mining difficulty hits a record 92 trillion. This specific chart that was making its way around Twitter or X showed very clearly, hey, this thing is going up. Bitcoin is going up. And when it comes to miner capitulation, it looks like we're all done. Michael Saylor recently said Bitcoin will be, how much? $13 million. And what is this estimate? $1 million per Bitcoin by 2030. Another chart roaming around Twitter/X is this particular one. Increase in the money supply. You can see it's gone parabolic. What has also gone parabolic are the returns for Bitcoin. Many people are saying that Bitcoin is a Ponzi scheme. Actually, the Ponzi scheme is fiat. After all, fiat means fake. And check this out. We are here. Different variations of this particular chart have been making their way around X. What is the best performing asset from 2011, 2012, and 2013? Was it gold? Was it US riots? US bonds? US equities? No, it was Bitcoin. And Bitcoin has been a top performing asset for quite a few years now. Hint, hint. And Larry Fink got the memo. BlackRock's ETF now owns almost 2% of all the Bitcoin in the world. But crypto is a Ponzi. It doesn't make any money. Hang on a second. Fees on Bitcoin, $800 million over the past year. And what's this? Ethereum, over $1.8 billion in fees over the past 12 months. So who has all this Bitcoin? Satoshi has quite a few, followed by Binance. Ooh, look at BlackRock, Coinbase, Grayscale. You can see that there are literally billions and billions of dollars going into Bitcoin and also crypto. Not such a Ponzi scheme. Standard Chartered Bank launches Bitcoin and Ethereum custody in the United Arab Emirates. And CleanSpark, the Bitcoin miner, has actually unveiled plans to acquire 7 Bitcoin mining facilities in Knoxville, Tennessee. Crypto adoption is growing. Pole position number 1, India. Nigeria number 2, number 3, Indonesia, and number 4, the US. And thank you again to everybody who comments. As an asset class, Michael Saylor expects that Bitcoin and crypto will reach $13 million per Bitcoin. Now that means it's going to take over about 7% of asset value globally. And that's just right now. And the thing with asset value, it keeps on increasing. We had a nice green day today. Now the charts are getting really fun. Look at this, 400K, yay! And a really good chart. I love this guy. Look at this, doing it properly. Looking at post-halving and looking at the bull run, The bear market and consolidation. What a legend. And now what are we seeing here? Ooh, we're just getting going. What is this particular chart showing us? It's showing us that, yeah, we could have a bit of a pullback, but hey, baby, we're going to rock and roll. And what about this chart? It was yesterday and it's in again today. 220,000. Oh, yummy. And what are we looking at here? An inverse head and shoulders. Oh, there's no limit to how high Bitcoin could go. And you know, if Bitcoin is going up, guess what's happening to your beloved alts? They're partying. They're going up too. Oh, and this is pretty good. Look at this. It's a guaranteed uptick. Well, apart from that, it's going to go up. Oh, and this chart is looking pretty cool as well. Up only. And what about this? A golden cross. Oh, look at what happened last time they happened. Oh, fireworks are in the air. It's not lovers in the air, it's Bitcoins in the air. And this chart is looking pretty good as well. You could spend hours on X trying to find all of these charts, but I bring them to you each day. And we better have a bit of fun going through them. What is this? Oh, this is like this. This is the same. It's about to take off. And just in case you didn't have enough good news, let's have some more. Oh, up only. And what do we know when the crypto fear and greed index just plummets down to extreme fear? What happens then? It hammers in the bottom. Wow, this is looking awesome. And also, we know that August and September, well, they're not really good months overall. But hey, look at October, November, December. Whew. That was the buy on good news. If you're just chafing at the bit, you've got your money in your hand and you want to run into the market wildly, just hang on a second. We have some run on bad news as well. Robin needs to get in on the act. But after I do Bogan and Robin, I'll give you BORSOG. BORSOG actually knows what to do, but you should at least be aware of the news. Okay, it's time for Run on Bad News Rabbit, which is, of course, Robin. And what's Robin doing? He's burning because the bad news is setting his ears on fire. When Robin looks at this, he's saying, August is bad, September is bad. I don't like September. I know, I'll sell everything. And Robin found some really interesting data. Miner revenue. Look at this. Miner revenue was really top here, and now it's come down, and oh my God, are we in a bear market? On top of that, Robin is freaking out. The federal funds rate is about to get cut. Now, what happens when cuts emerge in the market? Well, there are those recession things. And if we look at Bitcoin's price using the CBBI score, what do we see? Oh, this looks horribly like a top. All of this red here. Oh, don't like that at all. And it's retracing. Oh no. Are we in the bear market? Robin would say, yes, sirree, Bob, we're there. Robin is really running on bad news. And what about this? Bitcoin decouples from gold as crypto continues. Continues its bearish phase. Look at this. Oh my goodness. Are we going to go into the bear market? Hang on a second. X had us all excited. Now what are we feeling? Depressed? And the CPI came out, and what is this saying? Oh, calm markets. The stocks, crypto, and gold showed very little movement post-CPI. Not really. And what's Zero Hedge saying? Zero Hedge is saying, core inflation came out hotter than anticipated. Well, what's the problem with that, Ken? Well, when we've got core inflation going up, all the things that are luxuries now, like food, shelter, and clothing, are all going up. Look at that. Wow, that's not really good. And who gets hit hardest? It's, of course, the small businesses and their earnings. And what's happening to their earnings? Ay caramba, it's really bad. Run on Bad News Rabbit is having a field day. He's jumping all over the place. And don't worry, we can find some more bad news, even worse news. The US Treasury yield curve has turned positive. It's uninverted. 565 consecutive sessions of inversion. Now, what is this pointing to? Well, it's pointing to job losses and it's pointing to other things. Robin is feeling very good about feeling very bad. The yield curve has been inverted for quite a period of time. Now it's uninverted. And could it mean that the entire global market is in trouble? China to cut rates by up to 50 basis points on $5 trillion worth of mortgages to boost consumption. Or is that something Bogan could get excited by on green news? Okay, we need to leave all of this fluff behind us and look on buy on red, which is BOR, and sell on green, which is SOG. BORSOG. That is BORSOG. That is Rule 621. If you're just making your buying and selling decision based on the news, you're going to drive yourself absolutely insane. But Ken, what do we do if we're not looking at the news? What do we do? Well, we just look at Rule 242. Charts reflect, real-time news. Hey, that's pretty neat. But we know not all charts are created equal. The Tier 1 charts are the engine of financial markets globally. We need to look at the Tier 1s to understand what the heck is going on. And then we look at the Tier 2 and Tier 3 charts. We can look at them from a directional basis. Are they going up or down, or what are they doing? And also, we must look at the structural levels inside these charts because they give us a wealth of real-time information as to what is actually happening. I mean, it's perfectly okay. If we just want to be a Bogan or a Robin, we could do that, and many people do when they get into financial markets. But it's the death of 1,000 cuts. Instead, we need to be independent of the market. But being independent means that we need to hold three simultaneous facts inside our mind. First of all, price is always moving in a wave. It's always going up and down, it's all over the place. But there's an underpinning trend behind it. Even if the trend is downwards, there's always up and down movements. So we can go long at spot or long under leverage and make a goddamn fortune. But we need to know what we're doing. And you need to have these three simultaneous strategies in play at all times. That is the BORSOG way. The CTKS method is all about going from fear into confidence and to be able to profit in any market condition before people just listen to news stories and drive themselves absolutely stark raving mad based on all the stories and they crowd follow. If you're crowd following, you're going to get crushed. You need to go to not this before part, you need to go to the after part. You need to focus on the signal and be independent of the news. The best way to do that is to understand the structure of the charts that you're looking at, to know that they're all intercorrelated and interdependent, to have that three-dimensional thinking, to buy on red and to sell on green. And there are a lot of rules that need to govern your thought processes. One of the best things that you can do is to have no position and no story. Just have a neutral position. So that means that when you look at price action, it just goes up and down. That's what it does. And when it breaks through structure, it can become non-normalized if there's negative fair value gaps, or it can become non-normalized if they're positive fair value gaps. But you just need to know where they are. What happened in the last 24 hours? Well, NVIDIA, the CEO came out and said, demand for chips is great. Yep. That's how he said it. And what happened? We had a post-CPI dump. And remember, yesterday I was saying things could get very violent inside the markets, very turbulent. And then the NVIDIA CEO saved the day. Or was it just normalization? I don't know. Any story that you want. But the charts are telling us what's actually happening. Inside the CTKS method, we're basically masters of the universe when it comes to chart intercorrelation and interconnection. And what are we seeing here on the S&P 500? This red line is the inverted VIX. That's the VIX turned upside down. What happened when the CPI report came out? Well, the VIX spiked up, which means the inverted VIX spiked down. What's that blue line there? That's pretty cool. What's that? That's Bitcoin. And what's that white line there? That's the S&P 500. Oh, what's that white line there? That's the NASDAQ. Oh, what's that white line there? That's the Russell. And you got it. That's the Dow. And the VIX, inverted VIX, is the same on every particular one, and Bitcoin too. What do we see here? When the CPI came out, the VIX spiked up, which meant the inverted VIX spiked down. And it gave a direction on the entire stock market, but not just the stock market, Bitcoin, the Russell 2000, the Dow, and the NASDAQ. Ken, what are you saying? Are you saying that the VIX actually controlled the variability of risk returns on the S&P 500? Yeah, absolutely. That's exactly what it's supposed to do. But look how Bitcoin and the NASDAQ and the Dow and the Russell and all of the subcomponents, they all went with it. And this is very normal stuff. Anytime you hear somebody say, you're in crypto, don't worry about the stock market, that doesn't matter. Those people are showing their level of education in financial markets, and it's pretty low. And if somebody says to you, hey, up only or down only, run away. You don't want any bogans and you don't want any robins. You want to know the facts and what's actually occurring. Forget about all those stories. You can make money in any market, but you need to think differently. When we look across the top cryptos, what are we seeing here? As Bitcoin goes, so too does the entire crypto market. What's that blue line? Oh, it's Bitcoin again, just like it was before. What do we notice here on Ethereum? When Bitcoin plummeted down, what did ETH do? Did it say, nah, I'm not going with you, Bitcoin? No, it said, hey, Bitcoin, whatever you do, I'm doing. What did Binance Coin do? Yeah, the same thing. What about Solana? Yep, same thing. XRP, Doge, ADA, Cardano, they all did the same thing. And now you know what was actually going on underneath the curve. And that's a good way to say it. It's underneath that curve. You can see that it was the inverted VIX bringing the market down initially and then rallying it up. Remember, Bitcoin cannot escape the stock market's gravity. That's why we need to look at the Tier 1, Tier 2, and Tier 3 charts. Okay, these tier charts, they sound pretty important. Well, let's look at the VIX. You can see it spiked up and then it decayed down. As the VIX spiked up, what happened to the NASDAQ? Well, it spiked down. What happened to Bitcoin? That blue line, yeah, it spiked down. So we can gain a fairly good idea that the VIX is actually important. Oh, what happened to gold? Did that spike down? Yes, it did. Now, what happened to the dollar? As the VIX was spiking up and Bitcoin was spiking down, there was a flight to safety. And that's why we need to keep our eye on the DXY. The DXY plus yields, plus the VIX, plus the indices, plus bonds, plus gold, plus yields can give us an incredible insight. But Ken, that's so much harder than just reading a story in a headline. You have a fundamental question that you need to answer. It's a really practical question to answer. It is basically, how do you read these charts? How do you know what's going to happen to prices next? And how do you get ahead of any negative momentum before it unfolds on you? The answers to all those questions are embodied in the CTKS method. What I'll do here is I'll pop on the indicator. You can see all of these levels. They are called structural levels. You'll notice how they are all particularly different. Some are thin, some are thicker, some are even thicker still. There's gaps in between them, both up and both down, and there's all sorts of things happening. I'll give you a very quick overview. The first building block in the CTKS method, what do you call those lines? They're called CTKS levels or SLs or Stanfield levels. As you get deeper into the method, you'll understand there's not one type of line, there are many. And when they can congregate together, when they have a party and you can cluster them, you can form what are called SCs or Stanfield zones. But the key to understand, SCs never give you the inside scoop on how strong the levels are internally. Which brings us to the next point. When you have one solitary line just floating up there in space, that is weak structure. When you have a lot of lines hanging together, and the thicker the better, that is strong structure. It realistically depends on where price is. So for example, if price was entering here or had retraced into here and starting to move up, this is strong structural support. But if price had just passed through it like this, underside retested, this is strong structural resistance. It really depends where price is. For example, if price was coming up, this is strong CTKS structural resistance. It doesn't mean it will stop, it means that it will slow down. Now, what is this? This is very weak. You notice this gap in here? This is important. For example, if price is here and it's lost its structural support, this is called a negative fresh air gap or negative fair value gap. Now, what does that mean? It means that price, after losing this structural support and turning into structural resistance, can move down very, very quickly. A lot of people talk about institutional candles. This is what typically causes an institutional candle. What about if it's the other way? If price has been consolidating and starting to make its way above all of this structural support, this is a positive fresh air gap, also known as a positive fair value gap. Now, what does that mean? It means simply that price can move up very, very quickly. There's a couple of other terms that you really need to learn. Structural failures occur at structural levels. The key is they occur at a structural level. A structural fail means that you failed in terms of converting to support. It's now resistance, so it's moving down. A structural pass means that you've actually made a higher high and maintained a positive trend, and it occurs on structural levels. Now, when you get wave-based functions inside these gaps, these positive fair value gaps or negative fair value gaps, the passes and fails are called internal structural fails or passes. So you've got SFs, SPs, ISPs, and ISFs. There's another very important thing to understand. If we're getting a structural failure, as soon as you get a structural failure, you get a negative structural attraction or an NSA. If you get an NSA, that means the price is most likely coming down to structural support levels if it's lost resistance. So knowing where these gaps are is vitally important. And of course, it works exactly the other way. If you get a structural pass or an SP, you get positive structural attraction or a PSA. Now, what does that mean? It means that the highest probability of a structural pass is to move towards a PSA structural level. The key in this, where is the structure? How thick is it? How strong is it? How dispersed is it? It's vitally important to know. We'll analyze Bitcoin in just a second, but I wanted to let you know the course that I'm putting together that will be released on the 9th of October. If you're a masterclass student, if you're in the service subscribing to that and have an active subscription, if you've done level 1 or level 2 standard certification from CTKSmethod.org, you will receive this entire course absolutely free of charge. Somebody had a question on that in yesterday's video. I hope this has solved that. Congratulations to Lorenzo, who was the awardee of the Joe D. CTKS Partial Masterclass Scholarship. And thank you, Joe, for your very kind generosity. If you would like to obtain a Partial Masterclass Scholarship into the CTKS method, you can just put your name here if you're the awardee, and to get eligible for that, you'll need to fill out this form. This form is also in the link of the description. The masterclass is the #1 awarded masterclass in the crypto area. It is life-changing. A key understanding: statistical significance is a huge deal in finance. When I was lecturing first and second year statistics, a lot of people just didn't understand stats. And that's all right, because a lot of people just don't like mathematics. But you have to understand how strong your particular line is, if it's weak, or if it's non-statistically significant. A lot of people don't realize that the actual indicators they add to their charts are all statistically based. Literally, the CTKS method produces the world's most statistically significant support and resistance lines, and they're what are called those Stanfield levels, or CTKS levels. Okay, let's pop on the indicator and let's get real about analyzing this price action. Now, what are we seeing inside Bitcoin? You can see that there are levels of structure. There's also a negative fair value gap, a larger one, and one down to here. There's one also below that. When you understand negative fair value gaps and positive fair value gaps, you'll understand how price can move explosively, both up and also down, and also up. Look at this. This happens all of the time. And we've been talking about the CTKS method for years on this channel. Now, what is the purpose of these lines? You can see it pretty plainly, and this is just literally live price action. A lot of people do their studies and their training off not live charts, but dead charts. They are terrific storytellers, but we don't tell stories, we tell the truth of price action. You can see this level at 57,400. You can see that that was acting as a resistance, and then a support, then a resistance that failed, and then it broke through that and acted as support. This will continue to act as support. It is the most statistically significant line, just along with all the other lines. You'll note that most people are very random how they draw their lines. They will simply look at price and say, oh, I'm going to analyze 10 minutes worth of price data, and this is the resistance level, or that's the support level, and they just pull a line out of the air. This is not what mathematicians do. The people who created those indicators that you use would roll in their graves. A lot of them, unfortunately, have passed away. And for the ones that are still here, they don't like it. A lot of people will just do random stuff. It's very important to understand you need science. Mathematics is a science. But Ken, I don't like science. I don't like math. I don't want to know about it. I just want to make money. It's exactly why this method was developed. Each one of these lines is strong and statistically significant. When they cluster together, they get stronger. When they're further apart, they get weaker. Now, what does this mean? You can see how this 57,911 mark has acted as structural support. And if you tune in on yesterday's video, we weren't just testing this line. This is the power of the CTKS method. It's just undeniably powerful. If you have a structural failure and you get negative structural attraction, you already know that if it didn't pass here, it's going here. If it didn't pass here, it's going here. You know where the safety nets are. And if there's a big gap or wide dispersion between lines, you know the price can move up very, very quickly, or it can come down very, very quickly. This is literally a 15-minute chart, which is a very good chart to look at. It will give you very, very fast signals. And that's what you need as a trader. But Ken, I'm not a trader, I'm an investor. I've heard so many people, because I have a finance degree, and when you talk to people about their finances, they always say, oh, I don't know how to sell. I'm an investor. I just buy. I don't want to be greedy. I'll just buy up there. I know I could get a better deal down there. But, after 50 years, 60 years, what does it matter? The answer is, it matters. Okay, realistically, what are we observing here? We can see that price bounced off that 57,911 mark, and we expected that. That is structural resistance. Where did it come down to? Where was the negative structural attraction? 57,400. As it passed across, where was the positive structural attraction? You got it, 57,911. Why do you even have to bother with the news? The news is on the chart in real time. The price is telling you the truth. It has no story. If you want to drive yourself absolutely batty by looking at all the news and think that that gives you anything other than sleepless nights, you're actually deluding yourself. Ken, why you say that? What experience have you had inside financial markets? Well, about coming on 4 decades. And of course, I did the same thing. If you're into the news, it's because you think it actually matters. But the news is not made for you. It's made for the institutions. The institutions know exactly how emotional retail is. If you're running on bad news and you don't know where the structural level is, by the time it's reversed, you're probably at a level where you buy, and you buy on green news and you see that it just goes down, or something like this. It happens all the time. I call this the death of 1,000 cuts. It's a retail thing, and you must break away from retail thinking. And unfortunately, the vast majority of people that are giving advice on how to read price and how to invest and trade are not from financial backgrounds, and they also have a retail mindset, highly emotional. I want you to get to the stage where you look at the fluctuation in price and you just say, I don't care. As soon as you start doing that, you're actually getting with the program. You'll just be a blessing to yourself and those you love. Now, what are we seeing here? Look at this, 57,911, 58,114, 58,259, and 58,442. They are all structural resistance levels. Now, it's resistance because price is below it. We're coming into this, we would expect a reaction here. This is a high, this is a lower high. So we're seeing a degree of a lack of price momentum inside the structure at this current time. But we know where price can move down to. It's absolutely and utterly in front of us. We know. And if you would like this indicator, you can get it from CTKSmethod.org. In order to draw SLs, or these CTKS levels, you actually need 2 levels of standard certification. It's not an easy thing to draw these lines. And more importantly, you need to know how to interpret them as well. What happens if we reveal upward price momentum? We can see the sellers are inhibiting price appreciation because there's not negative gaps or positive gaps inside the market. We see a lot of clustering. When you get clustering, that means that the sellers are really hanging out here. They're throwing a rave. And that just means it's really hard for price to come up here. No wonder it's being squashed down at the current time. What you're going to find as you get deeper and deeper into the CTKS method, all charts are intercorrelated and interconnected. Here we're looking at the S&P 500. I'm going to pop on the indicator just in a minute, but it covers over 55,000 days worth of statistical analysis on this data. You'll notice as the S&P 500 dived down, Bitcoin also dived down, but you'll note that Bitcoin started recovering just a little bit earlier. It was just a little bit stronger. And this is why I always say, please look at Bitcoin if you're in the stock market. Why? Because it measures risk. If we look at the S&P 500, we can start to understand that we lost structural support and very light structural support existed below until we got down to lower structural levels. As that was the case, and the VIX is also playing a part in here, we can see that this loss of structure created a momentum to the negative side that the market eventually caught at structural support levels, and price reflected because negative fair value gaps become positive fair value gaps as well. Getting used to structure is vitally important because you'll know where price can just bottom out and where price is going to get structurally attracted to next. Understanding positive structural attraction and negative structural attraction is vitally important, especially as the markets get really volatile. Does it work with something like gold? Absolutely, it works with any price chart. You'll gain X-ray vision. And of course, it works with silver as well. Let's just pop on the indicator to understand where the positive and negative divergences were inside of this price chart. We can see a structural failure at that 28.85 mark. That created negative structural attraction back to the 28.50, and we saw a number of failures, which meant negative structural attraction to the 28.27, and if that didn't pass, and in fact it didn't, it meant that negative structural attraction back to the 28.14 mark. At least you know where price is going. But there's another term, a new term, to just introduce you to here. This is called a gravitational well. When you have so much structure aligning, and this is very strong because it's so thick, it becomes a gravitational area or a gravitational well. So even though price may get above it, it's likely to come back to it. And if price gets below it, it is also likely to come back to it. I would like to thank Shah and Al again for their very kind generosity in funding a partial masterclass scholarship. If you're interested in doing the masterclass and diving deeply into an understanding of how all the markets are intercorrelated and interconnected, the masterclass is definitely the way to go. And if you're here and you're hearing this, you are absolutely awesome. You're exactly the kind of student that I want to do this work for. In fact, Kate and I put a huge amount of time in exactly for people just like you. You are awesome. And to let me know you're here, just please pop inside the comments something like, "I made it." Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.